Hello everyone and welcome back. My name is Greg Furman and this is the VantagePoint AI Market Outlook for the week of May the 25th, 2020. Now, to get started this week, we're going to begin where we always do with that very important US dollar index. Now, what we can assess looking at the VantagePoint software is the market is moving, this particular market, I should say, is moving sideways between the VantagePoint verified support and verified resistance levels. Now, that support is coming in at approximately the 99.13 area, and the immediate resistance looking at the verified zone is at 100.60. The market unable to break through the bottom or through the top. When we look at our current signal going in to start the week, we can assess that the dollar is very slowly starting to turn back up yet again. Our neural index turning green, and we have a rising RSI. Now, what that rising RSI is telling us is that there is momentum building to the upside. Now, in my respectful opinion, we are likely to see a trending move in the dollar prior to July 1st, but I don't think there's enough news out there yet to really drive dollar demand or have dollar demand dry up. So we're likely to continue on this. This critical vantage point resistance, however, currently is 99.83. We would look to close above this level and stay above that level. Now, we have closed above that on Friday, but just by the spread. So again, not an overly strong dollar. When we look at our key vantage point pivot level, we can see that we've closed above our long predicted 99.67, but that's only one day, and that is on a Friday. What we will look for is the medium term crossing the long-term predicted difference back to the upside to give us that buy signal. Now, if that transpires, then gold would be a little bit softer potentially. But again, in most cases, the dollar is not strong until basically the very end of the month or the first week of the new month. So I anticipate gold is likely to hold around this 1738 mark. But again, we do have that medium term crossing the long-term predicted difference with the neural index, warning us that dollar strength is pending here and that gold is a little bit soft here. So again, be very cautious with that. I would look at the key pivot area, which is what we normally would do here at 1738. And again, the additional pivot, which is again the long predicted, the blue line by itself, where the correlation of 31 other markets is attached to that blue line, that's the level we want to watch. That is now coming in at 1751. We must get back up above that for gold to continue higher. Now, with the S&P 500 this past week, once again, very, very formidable resistance up at this high, at this verified resistance. That's coming in at or about this 2980, 2975 mark, and we're just not able to break through here. Our MA diff is moving sideways, as is the market here. So basically what that's telling us is that we don't have a lot of buyers above 2950, but we also don't have a lot of sellers down at this most recent low at 2777. So right now, we would continue to play the range on the S&P 500 with a slight downward bias. Looking at the neural index, the position of the RSI is actually warning that we could be seeing more strength in the S&P 500. But again, very high correlation to that dollar index. When we look at oil going into next week, oil, once again, unable to penetrate through the Vantage Point verified resistance zones. That's coming in at or about 34.78. If oil is going to advance, it must break through this particular area. So right now, looking at the indicators from Vantage Point is warning us that oil is likely getting ready to move lower. We can see our predicted differences starting to turn down. Our neural index has gone from, after multiple days being green, has gone from green to red, meaning down. And our RSI has peaked and is pointing straight down. So shorts to begin the week in light sweet crude oil, a very, very reasonable play. Now, once again, as I've discussed in the past, that I like to add Bitcoin to the weekly outlook because I do feel there is an investment here. Regardless of what some of the market pundits are saying, Bitcoin has been a fantastic investment in 2019 and even in 2020. It's once again one of the top investments. I believe it's up approximately 20% on the year. So very, very nice move up here. But we're struggling again up at this 10,000 mark. That seems to be the barrier for Bitcoin. Looking at the indicators right now, it's warning us this key pivot area, the long predicted and T-cross long stacking up between 93.09 and 92.13. If we can break back up above those two key pivot areas, Bitcoin looks very good yet again for longs. But again, in my respectful opinion, that is probably not going to be until the end of the first week of the new month before we see a bigger move back up in Bitcoin. Now, with our main Forex pairs, once again, some very, very good two-way action with the currencies. The euro having a very good week, as suggested in last week's Forex Weekly Outlook, which is, again, this is not a recap of something that's already happened. This is an actual market outlook for the next trading week. When this video is being produced, the markets are closed. So again, this is not something where we're just recapping something. We're actually forecasting. So in last week's presentation, I had stated that the euro is likely to move higher based around the time of the month, and we would see profit taking on Thursday. The verified resistance zone here in the VantagePoint software, 110.17, was clearly too much for the buyers to try and keep pushing the euro higher. It failed. It's starting to move lower, but we've got some pretty good support down here. The long predicted is at 109.10, the T-cross long 108.81. Watch those two particular levels, because in most cases, guys, the euro loses most of its steam in the first week of the new month. And before it does that, there's usually one big final push to the upside before it actually sells off in the first week of the new month. So for now, we remain deadlocked in this particular range, 107.75 on the downside and 110.17 on the upside. We continue to play that particular range until we can't do it anymore. Right now, the neural index is pointing lower, but again, we must break through 108.81 and close below that level to confirm the euro pair is actually going lower. Now, when we look at US Swiss franc going into next week's trade, once again, challenging that vantage point level, our T-cross long 97.24. We've got our long predicted at 97.16. These are critical intraday or daily pivot areas that the market often comes back to. Our signal here is a little mixed, but also pointing to some further US dollar strength. But again, be very cautious on Monday and Tuesday trading, particularly this coming week, because again, we've got a US holiday. So Tuesday's the new Monday, guys, so be careful around that. But for now, again, this is a key level, 97.24. We need to close above that level at least 2 days in a row if we're even to think about going long with this particular pair. Now, as we look at the pound dollar, once again, if we're anticipating one final bout of dollar weakness, then we would anticipate that to start the week, probably on Tuesday, because again, the US markets are out on Monday, a final push to the downside potentially on Tuesday. I think that would be a very good buying opportunity for the remainder of the week. The low point there, we're coming in at about 120.74. I would anticipate a slight move below 120.74 and then a complete reversal probably by Wednesday. So keep an eye on that. The retracement point 122.70 and 122.12. The primary indicators here from VantagePoint, very, very mixed on this one. The neural index is down, the RSI is down, but our medium term crossing our long term predicted difference is still warning us that we could see a reversal on this pair, and I would anticipate that, like I said, probably by, I would say, around late day Tuesday or early Wednesday trade. Now, with the dollar yen going into next week, very, very frustrating pair to say the least here. We continue for months to move in sideways here, making very, very small gains to the downside, but always moving back up. So we're moving back towards this verified resistance. That's coming in at the 108.08 area, short while below this particular area, guys. The indicators from VantagePoint, once again, incredibly mixed here, but that's the benefit of having some of the core indicators at your disposal, because they don't all say the same thing, and we don't really want them to. But If we can get the neural index on board with this particular signal, the pink line crossing over the blue line, that would potentially lead to a move back towards that 105.80, 106 area. So we'll watch for that. But again, we would have to see the market break through, break free and clear of 108.08 if the upside has any chance whatsoever. Now, as we look at the USCAD going into next week, also a very mixed signal. Our predicted differences are stacked on top of each other, but we've got a rising RSI. So again, by the latter part of the week, I would anticipate the US-Canadian pair making further gains to the upside. But to begin the week, US-Canada is always a reversal trade from Monday to Tuesday. This week, it'll be from Tuesday to Wednesday because of the US holiday. So be careful of that pair. But right now, we have very strong buyers coming in down around 138.70. But we also have a considerable amount of order flow traders that are shorting this up at the high of 140.140. So for now, we continue to play that range, utilizing the VantagePoint predicted high and low of the day and making sure we're taking profit until this particular range breaks. Same thing would apply with Aussie US. Aussie's made some gains here. Now, the key intermarket correlation, guys, that you want to know and know very well is that the Aussie US and the New Zealand US are both following the S&P 500. So the S&P down, Aussie down, New Zealand down, CAD down for that matter. So keep a close eye on the S&P this week. If the S&P cannot hold those levels, then the Aussie US is not going to hold these levels either. A breakdown below 65.39 and 64.80 will trigger probably panic selling to some degree, but we are going sideways here for the last month or so. So we'll continue to monitor this with a slight bias to the downside going forward. The same would apply to New Zealand US. You can see that we failed exactly on the VantagePoint verified resistance zone. That coming in at 61.57, but we do have strong key pivot support, 60.82, excuse me, and 60.57. These are the two critical support levels. If we lose those levels, that means the stock market's moving lower and this pair is likely going to follow. So with that said, this is the VantagePoint AI Market Outlook for the week of May the 25th, 2020.